Welcome to the Commercial Real Estate Show. Thanks for joining us to lead, learn, and laugh. I'm Michael Bull, your host to the world of commercial real estate. Well, today we're going to talk about the multifamily market. You know, the apartment industry has been doing very well with the rose off the bloom somewhat with single family home purchases and, you know, the large millennial demographic becoming of age. And, you know, the other factors like student debt and more stringent loan underwriting for home buyers. So the apartment industry has been improving. It's been doing well. But what is in the future for apartments? We'll find out today. Please welcome my first guest, Greg Willett, MPF Research. Greg, thanks for joining us today.
Great to be here, Michael.
Well, thanks for joining us. I know you're in the windy city of Chicago there with a technology conference there on multifamily. How's that going?
It's been an exciting few days and lots of things to talk about on the technology side.
Well, great. Well, why don't we just start with technology there for a moment. What's the latest on technology in the apartment industry?
Well, certainly I think people are concentrating at this point on just the information side of the industry, business intelligence, and really getting the information you need to make smarter business decisions. I think that's really the hot button on the technology side at this point. Yeah,
I mean, there's a lot of information out there now, and if we can pull that together to make better business decisions, we'll all do better, right?
Absolutely.
And tell us, how has the multifamily sector been performing so far year to date this year? I know it's been improving well. Has that slowed down a little bit?
You know, Michael, I think we came into this year and there were expectations from a lot of people that we would slow down a little bit. Mm-hmm. We have just logged a quarterly performance that was great by every measure. And I'll just throw some stats at you. For second quarter, demand came in at 132,000 units across the country. That is one of the biggest totals we've ever seen for a 3-month period. Occupancy bumped up to 95.6%. That is a 7-year high, and it's more than 100 basis points over the long-term norm. And then the rent number, annual growth right at 3.5%, but the interesting story was that second quarter performance. A big chunk of that annual growth occurred during second quarter. Pricing went up 1.9% for new leases, and that is actually the best 3-month jump in rents seen in 14 years.
Wow, well, that is amazing and great news for the apartment industry. What do you think is causing this surge in improvement?
Michael, certainly part of the story is that the job growth pace has accelerated. And interestingly, we're actually starting to add some high-paying jobs after the job production has been so focused on low-paying positions. So we're getting some solid wage growth in some parts of the country. Weather's also a factor. As we were in the winter months, it was really bad weather in a lot of places, and so we've had some pent-up demand that seems to be unleashed at this point.
I see. Well, again, that's great news. And do you see improvements across all classes?
Yeah, it really is. One of the parts of the story is that it really is occurring in all segments of the marketplace. Certainly the middle market continues to be the especially strong performing segment, but the top-end properties are doing really well also. Okay,
so you're seeing a little more occupancy and rate growth in, say, a B class still than an A?
Yeah, it is. It's particularly on the rent side. I mean, there is a competitive leasing environment at the top end because of the product that is being delivered, but still you are getting some solid rent growth out of those properties.
Okay. And how about geographically? Are there certain market areas that are hot or not so hot?
You know, markets that we've been talking about for a while on the leaderboards are still up there. That includes the Pacific Northwest, Denver, the Texas market, South Florida. But we've got some comeback stories, too. And probably the biggest one for the year is Atlanta is doing very, very well at this point. And then I was talking about some new construction. There are new construction better than some people had anticipated. Washington, D.C. would be an example. Also, Chicago and Charlotte are doing really well, even though they're adding a lot of new products.
And how much new construction are you seeing right now?
We've been running for a while with the ongoing construction level at about 350 to 400,000 units, and it's holding at that level. Something I'll point out, though, is this wave of new supply is really going to crest in the last half of this year, and we've got about 170,000 units that are scheduled to complete in third and fourth quarters. So that's a big chunk coming in, and the ongoing construction level on the positive side actually will be a little bit less as we get into 2015.
Okay, and we're speaking with Greg Willett with MPF Research. And Greg, where do you see some opportunities, either in buying value-add existing communities or maybe in new construction?
It's interesting on the opportunity side. We talk a lot in the industry about this urban core story and how millennials really like that urban environment. But I think the real opportunity at this point is middle market product in the suburban environment on the existing side. And I also like that construction story in the first ring suburbs with sort of urban light style product.
I see. And how about in the value add or in the B or C? Are there still opportunities there?
There are opportunities there. Certainly people have been chasing those deals for a while, so it's not as plentiful as it had been, but that story has some legs to it.
Okay. And we talked briefly about the factors impacting the multifamily market, but I'd like to ask you a little bit more detail there. I mean, when you look at the job market that we have now, where it's kind of been a weak market, I mean, some people may feel like they weren't at their dream job and, maybe they were renting. As the job market improves, should that help the apartment market or maybe cause a little bit of fluctuation there?
Well, certainly as the economy gets better, that does position for home sales to get better, and so there's some trade-offs there. But as home sales accelerate, that means the job growth pace is going to accelerate also. So, and we do seem to finally at this point be pulling some of those young adults who have been living home with mom and dad. They seem to be entering the market now.
Yeah, that's good. And you mentioned home purchases. So how will that affect the housing market? So if some of these tenants, they start to see home values improving again and start seeing that appreciation, might we lose some of those tenants, or is that new jobs created from that new construction and that spending that people do when they buy new homes, all that new job growth, is that going to more than take over the numbers there of a loss in tenants because they bought homes?
Yeah, I mean, if we start losing people in larger numbers to home purchase, to me, in the worst case, it's a neutral story because you have accelerated that job growth pace at the same time. So we don't look at that as a particular danger to what will happen in this cycle.
Okay. And you're at the technology conference there you guys are putting on for, what do you say, about 1,000 of your clients in Chicago. And I guess one of the things that is heavy use in technology in the apartment industry is revenue management software. How is that going? Are more communities and more owners using revenue management?
Certainly it is one of those transformative technologies that has emerged in recent years. And yes, the use of that technology, that one specifically, is expanding very rapidly. And particularly at the top of the market, it's just the way you do business now, and virtually everybody is getting on board with that.
That's interesting, and we have a very sophisticated audience, but we also have a broad audience. So for those who may not be that familiar with revenue management software, where is it getting the information, and how are our apartment community managers utilizing it?
And the basic concept there, I mean, it's the same technology that exists when you buy an airline ticket or a hotel room. It's looking at supply and demand and setting pricing through statistical modeling. And so a lot of information comes through there, and getting those rents reset every day, looking at really if you have exposure to availability within your specific portfolio, that just addressing it every day pushes up the overall revenue numbers.
Yeah, that's nice. So it's using information on the submarket, the competing properties, what vacancies you have coming up, and really takes some of the guesswork out of it. Well, Greg, thanks for joining us today. We appreciate you calling in from Chicago.
Absolutely. It was a pleasure to be here, Michael.
Well, thank you. And if you like more from Greg Willett, visit realpage.com. You can look at technology and all the services there at MPF Research. Well, I'm Michael Bull. This is a commercial real estate show. Come stay with us. We're going to have more on the U.S. apartment market. We'll be right back. The Commercial Real Estate Show is brought to you by Florida International University and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.